My guest this week is Tom Moerenhout, a professor at Columbia University in New York and the lead for critical minerals at Columbia Center on Global Energy Policy. Through these roles, Tom has been an active commentator, especially on US critical mineral and clean energy policies over the past years. In this Power Players interview, after US President Trump's first 100 days, we assessed Trump's critical mineral policy aims, looked at the potential implications of Republican rollbacks of clean energy support, and discussed some of the biggest trends shaping the critical mineral industries, including the need for derisking through policy intervention. Finally, we discuss how to engage with China, the global cleantech leader. Thanks, Tom, for joining us here today at our benchmark office in London. I think it's the first time, right, at our office?
Correct. Yeah.
Perhaps to start, because that's a question I always like to start with, perhaps tell a bit more about your background and also how did you end up at working on energy, critical minerals at Columbia as a professor and so forth.
Sure. Well, like so many other people, I started with unpaid internships as it goes in Geneva, working for Sustainable Development NGO. I worked for them for quite some time, specifically on fiscal policy. And then with fiscal policy, we also started working more and more on sort of natural resource-rich countries. And this is how I kind of got into minerals. And then I also worked on battery supply chains with a range of clients over the years. So I worked with that organization. I also worked independently as a consultant for mostly governments, foundations, companies as well, on battery supply chains as well. And so at one point, those two came together. When the whole story exploded, if you wish, I would say 2019, 2020, when people really started understanding critical minerals was an issue. And ever since I've been working pretty much only on that.
Okay, but you want to perhaps one of the few people, experts that have been working on critical minerals way before all the...
A bit longer
than the geopolitics. That critical minerals became a center stage of the geopolitical environment right now. Perhaps in terms of content to start, I mean, I've already mentioned it. I mean, Trump's first 100 days have been, put it like an understatement, a roller coaster. A lot has happened, but one of the central policy focuses of this administration arguably is bolstering domestic manufacturing and critical mineral production, specifically focusing on mining and processing. And they are doing that through, they aim to do that through different tools, more support, streamlined permitting, government-backed offtakes has been mentioned, and of course, tariffs. But what is your assessment of the first 100 days of this administration, and perhaps also what are the opportunities that have been created through this policy, through the executive orders, and also what are the gaps in the policy aims of this administration?
Yeah, no, thanks for the question. I think everybody's talking about it right now. I always like to divide things in sort of three: the good, the bad, and the ugly. And I think the good is critical minerals is a top priority of the administration. It was already like that during Trump 1. Credit where credit is due. They did a lot on sort of their own critical minerals strategy, the fact that they had problems with vulnerabilities in the supply chain. So it is a top priority. We have seen a lot of executive orders. I think those executive orders are going in the right direction, which is basically how do we empower the DFC, the Development Finance Corporation, the Exim Bank, and how do we use sort of Defense Production Act funding, so if you wish, military funds to support our critical mineral security. What those executive orders also do, which I think is very good, is actually point out to specific high-level people in the administration that they have a job to do in the coming 1-2 months to basically decide on projects, get a pipeline ready, and have different policies ready to initiate. We will still need to see the result of that, but I'm quite optimistic, especially on the side of DFC Exim. There's actually a lot of things going on behind the scenes that makes me optimistic. That's the good part. I would say the bad part, if you wish, and the bad part is things that can still be adjusted, right? It's not
the ugly still.
It's not the ugly, exactly. It's just the bad. The first part, I would say, with the bad part is and maybe I should actually put that in the ugly part, but this what's going to happen with the Inflation Reduction Act, right? So basically, there was uncertainty That's why in my head it's part of the bad. But yesterday they came out with suggested
Yeah.
rollbacks of the IRA that are going to kill the demand side. And if you don't take care of the demand side, you can do all what you want on the supply side, but the price might suffer. So I think that is really, at this point, if the proposed amendments come into force the way they are written today, it's definitely ugly. It's not bad. I think part of the bad side, I would say, is there's a huge focus on the upstream right now. And that's good, right? Like if you think about Ukraine, the DRC, even Greenland, they are, and domestically as well, they're really focusing on getting access to resources underground and being able to take them out. It doesn't change anything on the processing side. I've seen very little happening on the processing side. And of course, that is really the choke point that China holds, right? Whatever your feelings are on China, the percentages that they have in terms of processing capacity, you wouldn't be comfortable if it was your uncle holding that capacity. So I think that's definitely the bad part. We need to see much more results. And how do you get that? That's basically, it's a Jerry Maguire game. It's a show me the money, right? And you need to have those appropriations going through Congress. Let's not forget, Biden was already doing the military funding as well. But that's when sort of the devil is in the details, right? Up until 50 million, you can just notify Congress. Above 50 million, you need congressional approval. And then the whole pot is actually fairly limited compared to what China has been doing for the better part of 2 decades. So I would say that's the bad part.
Okay.
The ugly part, IRA, and I would say the second part is just alienating your allies that could have really helped you to spread the cost and spread the risk. And this is,
detrimental.
For me, it's inexplicable, quite frankly. But that will need to be adjusted because, again, they will play a role in diversifying supply chains.
Yeah, interesting. I mean, some takeaways from this is that although the US wants to bolster critical minerals, it is not looking at the downstream part of the supply chain. It's not, having an holistic view and an end-to-end supply chain approach, which I think arguably is needed to not only bolster the critical mineral supply chain, but manufacturing in general, I think, in the US. In terms of funding, I mean, coming back to that, more funding, is that related to DFC, the Development Finance Corporation specifically, and Exim Bank, or just in general, more broadly, that this policy needs to be backed up by a lot more funding?
So I'm going to say both. The first part is, if you think about instruments like stockpiling, where there's a bipartisan consensus, this would probably be a good idea, right? Okay, you need a lot of money to stockpile. My team at Columbia is trying to put figures on that. We're looking at the national defense stockpile. You're going towards 6-7 billion that you need just for acquisitions, right? So you need that money, and that money needs to come through Congress. The second part on DFC and Exim, I think I'm quite optimistic there. You have sort of the reauthorization of the DFC coming up.
Okay.
Part of those discussions are also linked to critical minerals and the ability of the DFC to basically invest quicker. But most importantly, I think with DFC and Exim, you have the possibility to fund, if you wish, funds in the middle who are hyper specialized in investing in critical minerals projects. And I think that is a model that we'll see much more of in the coming years.
And it's also interesting that you put emphasis on perhaps the biggest choke points, if you talk when it comes to critical minerals, is processing. Although I think that the US now, with the frameworks and the executive orders, have put a lot of emphasis on the need to bolster processing. But as you said, I mean, we'll still need to see what the practical implications will be of these executive orders. And I guess something that you alluded to in your, I think, first part of your answer is the needs, because the executive orders are pointing to different parts of the administration with different tasks, ordering basically, you need to do this, you need to do that. And I guess with the Biden administration, but just more in general, US administration, coordination and a coordinated approach is one of the challenges, right? Because critical minerals is touching upon different segments across the administration. So that's also, I think, a challenge, which I think sometimes is overlooked. And I guess now with the executive orders, that's, I think, a merit that everyone is just getting involved or asked to get involved on the policy side and trying to coordinate this more at the presidential level.
Exactly. I think you say it very well. In the past administration, let's not forget, this is right after COVID, and people are only really waking up to the reality, right? And so how sometimes things worked was one department was interested in doing more on critical minerals. So they were looking, for example, at IPEF, which is this sort of framework with Asian countries. They just wanted to do stuff, but there was no real coordination. And this administration, the executive order, as you say, has been starting to point out people, you have to do that, which is very good. But in my opinion, if you realize the scale of the challenge and how much it's going to cost to, basically move the needle on this, you need a critical minerals czar in the White House, right there in the National Security Council. That's my personal opinion. And I know there's conversations about that ongoing in DC, but that would be a smart thing to do.
Okay. And you alluded to it. I mean, looking now forward to the next 100 days, I think we should perhaps put our attention to what's happening in US Congress, because, I mean, from a political perspective, I think Trump is putting a lot of his credibility as a politician to the next 100 days, in a sense that he has promised a lot of tax cuts attached to spending cuts. They would all be put, to our understanding, in a bill called the Budget Reconciliation Bill. The preparation of that is still ongoing as we speak. But one of the issues that would be put in this bill, is to put it differently, this bill would potentially or would be used as a vehicle to decrease federal support for clean energy in the form of the IRA and the BIL. So we have seen some glimpses of that, some draft proposals from different committees, but could you perhaps summarize what Congress and the Republican members have suggested and what the potential implications would be on the clean energy supply chains, but from a downstream perspective, looking at batteries, EVs, and so forth?
No, absolutely. I think the two big ones that are currently suggested are, of course, cutting 30D. And then 45X, the production tax credit, is also being adjusted. And we're hearing a lot of voices coming from the industry saying this is problematic, right? And industry at this time is being very polite about their criticism because they're afraid to, piss off the sheriff, right? That's how it is, but it is problematic. You have, for example, you have minerals demand with national defense and so forth, but it's just a fraction of what you have when you call it clean energy. I would call it diversified energy dominance, right? So whether that includes partial solar,
and in the
electric
geopolitical
vehicles,
competition with China, right? I mean,
exactly that. You really risk just lumping behind even further over the next 10 years or so. And so I think 30D there, so the electric vehicle tax credit is a very big one. And actually you had, as you well know, you had sort of sourcing requirements and so forth. And I think 30D actually started really moving the needle internationally. And Biden was never able to sort of optimize the policy, right? And that's important for industrial policy. When it starts, it doesn't mean that you don't need to adjust it or have feedback loops on it. And the IRA was in need of basically, thinking, how do we move forward from this? But cutting it all together is creating huge levels of uncertainty. If you ask about the downstream, I think some of the Korean investments in the battery sector might dry up. There were a lot of announced priorities and projects, and this was going in a good direction. This puts that at risk. Similar, I hear from the solar industry is also worried about, the 45X specifically being adjusted, which all of a sudden led them to be at the cell level, but competitive with China. Ultimately, what do Republicans say about this? Well, I mean, again, the proposals have only been out for 1 or 2 days, one day. But I think there's been a bit of pushback. And I think that's probably a good thing. A whole lot of investment. I don't know the exact numbers. If you want to know the exact numbers, you should.
A lot,
You should, check benchmark.
Of course.
But 80+% has basically been going to Republican states. And there are already a few senators and members of Congress that say, coming at this with a sledgehammer is a bad idea. Also, by the way, for your own tax gains in the medium term. It's as simple as that.
Yeah.
You know, the way this works is now the Office for Management and Budget is going to basically calculate how phasing a tax credit, they're going to presume that some manufacturing is happening, and then we get the full tax credit, and that looks good on them, right? But many projects are just going to be paused or not completed altogether, which means there's no tax revenue to begin with. Right?
Okay.
So
there's perhaps an overlooked issue, right? The tax revenues that were...
Yeah, and how to calculate it. Now, this is not a Trump thing. The OMB calculations are always pretty complex, but it's definitely something I think that is overlooked. And again, you're alienating a partner, right? South Korea has been a phenomenal partner to building out the US battery supply chain, and now you're kind of, well, that's a knife in the back.
But the watering down of 45X, that to some extent is a surprise, right? Because we have seen local opposition or Republican opposition towards watering down, let's say, the clean energy tax credit, to use that as an umbrella. I mean, there were some statements from, amongst others, Senator Murkowski on this. I mean, the others, Section 30D, that's not a huge surprise, I think, that they want to repeal that or phase it down. Because I've seen some comments also from Republicans saying it's not a repeal, but we are phasing down the support. But 45X, I think, to me is a surprise, because, correct me if I'm wrong, but it has been, I think, essential to some of the clean energy projects and battery project specifically. So I think repealing this or phasing it down will have potentially major implications, project cancellations, projects being paused also in the meantime. So
No, absolutely. And on top of that, I would say 30D was complicated, right? You have Elon Musk with his influence in the White House, who didn't really care about 30D. You know, if the tax credits fall away, all the better he will capture market share. He'll sell a couple of Teslas in the United States, but he'll capture market share. That was the thinking. So 30D, as you say, is not a surprise. 45X made, at least for a lot of the developers, made a huge difference to their economics. Was that enough? No, that's why the Biden administration was working on a playbook of looking into different instruments to kind of complement 45X and start creating a much more competitive landscape, right? Because 45X, what it does is, it's very rudimentary if you think about it. It's like, okay, our cost of production is 30% higher than China, we give you 30% tax credit. So it's almost, to make things on par to
make US competitive, basically.
Exactly, which is only a short-term solution. You need to have a bigger playbook. The Biden folks were working on that very well. I think you have a lot of people within the Trump administration that actually want to take that forward. But lots of uncertainty now. You cut 45X. Obviously, there's been slicing and dicing across the whole government, including some very competent people. And then if you are now an investor, what are you looking at? Are you really going to invest multi-billion-dollar projects over a certain period of time, knowing that things can change very fast?
Yeah, we'll see what will happen. Given Trump's strong position in the GOP, I do think that we can't expect major changes from the proposals, even with the Republican opposition, given the jobs implications, but we'll see. Fingers crossed.
If they decide to whip votes, they will whip the votes.
Yeah.
I think so too.
Perhaps now I want to move to a very specific topic, but a topic that I think gained a lot of interest and is also one of the big policy focuses of this administration is streamlining permitting. Because there's been seen, I think worldwide, even also in Europe, seen as a major stumbling block to increase critical mineral production. The US is trying to streamline this. They've already, through the executive order, but also by doing some work as well at the level of the Department of Interior. They've announced some projects that will be fast-tracked, I think 20 so far. But just generally, and just to have an overview, what are your views on the administration's policies regarding permitting? Are there any risks as well? And do you expect, even with the ambition to streamline permitting, do you expect major stumbling blocks still to persist?
I think so. There's two elements to that. I would say on the one hand, what they're doing now, they are using the legislative tools that they have, like FAST 41, which is the one that you're referring to to try to fast track a couple of projects. And that's probably not a bad idea. Some of those projects, I don't want to talk about all of them, but I think the Biden administration treated them quite wrongly.
There's a huge focus on copper, right?
Yes. And some of these projects, I would say the opposition to me has not always been in good faith. And that's something that civil society people are at risk of saying anything like that. But I think some of the opposition to these projects have not always been in good faith. So the fact that something is happening there at the Department of Interior is probably good. And whatever your thoughts are on Doge or Elon Musk, it's easy to sort of recognize that there was a lot of duplicative procedures and red tape in federal permitting. US and Canada do it. So permitting times have gone up like pretty much all over the world. But some countries that do better, Australia, Canada, they do it in half of the time. And they do it with as high, if not higher, environmental and social standards, actually. So it's not that you need to compromise on that to do quicker permitting. It's mostly figuring out all the red tape in government. Now, that's one thing. Having a big sort of permitting reform bill is a whole thing, a whole other thing. And Biden tried to work on that as well. The Republicans blocked it. Now they might try to add it to the reconciliation bill as well. We'll see whether that works or not. If it doesn't, you're already in midterm territory, and I don't see anything happening quickly. Now, let's say it all does, right? You're still stuck at the state and the local level, which in the United States really complicates things as well. So the federal government is going through this exercise of how do we permit better. Ideally, you would have that at state and local levels as well. Because even if you get a better sort of federal framework, there's still that part plus the litigation prone nature of these type of big projects in the United States. And that's not really going to change with the federal overhaul.
And that brings us again to I think one of the major issues of mining is the long lead times of these projects. I mean, if one of these projects, let's say, goes ahead, I mean, the implication will be seen far after Trump's presidency. And then something you alluded to is friendshoring. I mean, there's also been a lot in the news, like Trump's or the US, let's say, transactional and sometimes aggressive resource diplomacy, if you can call it like that, with the agreement with Ukraine is an example. The statements towards Greenland, now the ongoing discussions with the DRC and Rwanda. But apart from that, I mean, the Trump administration seems to put less emphasis on friendshoring, especially at the multilateral level, than the Biden administration. Although if you look at the forecasts and the supply deficits and also the own mineral endowments of the US basically needs mineral resources from other countries, preferably allied countries, to meet demand for these minerals, not specifically perhaps under Trump's administration for batteries, but let's say for AI, defense, and other sectors. But what's your view on this? I mean, beyond the transactional resource policy that we have seen at an international level, what are the needs of the US, and which countries could still potentially be an interesting country to work with using the Trump administration's perspective?
I think it's a very good question, and it's one that has annoyed me a fair bit, if I can be honest, in the last couple of months. It's that obsession with the domestic projects. I support. I think that's good. The US has phenomenal resources that they can actually extract with high standards, and so the fact that they're trying to build momentum around that is good. But right now we're pretending that comparative advantage is dead, and to that I would say long live comparative advantage, right? Especially if you think of the upstream and the midstream. So if we go with the upstream, ore grade is often everything, and that means that you're going to need to work with projects that are out there that can include phenomenal ore grades for copper in the Democratic Republic of the Congo. It can mean working together with Indonesia, where, the nickel story is complicated and affects Australian and Canadian mines for sure. But these guys are not going anywhere in the next 2 decades. And you need to watch out that very important source of supply does not end up fully in the hands, if you wish, of your geopolitical adversary. So that's one thing on the upstream. There's just the geological realities where, some projects are just going to fall on the lower end of the cost curve in certain countries. So why not focus on that, right? The MSP, the Mineral Security Partnership, was a great idea for the Biden administration. It never did enough. We need to be able to admit that, right? It was starting to coordinate things internationally, but we never saw the money that we really needed to see to de-risk these projects.
I guess that Section 30D was, as an instrument, far more effective in terms of friendshoring, right? Because local content requirements or sourcing requirements were attached to it, to the tax credits to be eligible. And domestic content was equal to content from some countries, coming from some allied countries on an FTA. So, that was a real powerful instrument.
Absolutely. And so for the minerals, they had this provision that the minerals in the battery cannot come from China. That's number one, or foreign entities of concern. And secondly, they can come from FTA countries, right? Free trade agreement countries. There, initially, the thinking was we can conduct critical mineral agreements with different countries, and then they will be able to comply with that. So this idea of friendshoring was there, and they did one agreement with Japan, after which Congress basically went, pardon my French, but they went completely crazy. And the idea was actually to replicate that model with high social and environmental standards in there, with countries like in Indonesia, like in Argentina, maybe in India on the processing side. So there were all of those ideas of having, really sort of these critical mineral specific trade agreements, which I think was a very good idea. I hope at one point Trump takes up that idea and negotiates.
Perhaps with Argentina. That's a country that I hear a lot now is at the center of interest. A lot of investments have been going into the copper and the lithium industry. Absolutely. And both leaders are quite friendly to each other.
They most certainly are.
So I think that could potentially be an interesting one beyond let's say the countries that have been in the media right now, DRC, Rwanda, and others.
So I think there's a few more that could really be looked at. Obviously, Canada, Australia. I'm not.
You're still a believer. I think I remember a conversation like a few months ago that I remember you saying that I still believe in US-Canada cooperation, despite the difficult, to put it as an understatement, the difficult political environment. But you still believe that they can still work together.
I think so. Yeah, I think so.
And they should work together.
They should work together. They can work together. It doesn't help that when one leader of one country says that they want to annex the other. Obviously, that doesn't help. But I do think they will work together over time. So those two are no-brainers. I think India, to me, I've worked a lot in India in my life, is an interesting one as well on the processing side of the equation. This is not a short-term thing, though for certain sectors, you have...
They've been quite active in the critical mineral diplomacy space, right? They have signed a couple of agreements because they lack... although I think a lot of exploration still needs to be done in that country, but now currently they seem to lack a lot of the endowments, so they are trying to get the minerals and then try to build the processing industry and then to move up the value chain as well.
Exactly. And I think some of the big sort of checks that you need to have for processing is know-how in the chemical industry. India is already there. Ideally, low labor cost. India is there. Reliable energy. Some states are a disaster, but some states are absolutely 100% reliable energy, even low carbon if you want to add that to the equation. So they have a lot of things going for them. So I think that's an interesting partner to work with as well.
And we forgot the Gulf states as well.
The Gulf states.
Saudi Arabia, we've seen an agreement, as we speak now, yesterday, signed between the US and Saudi Arabia and the rest of critical minerals in there. Processing, we know that Saudi Arabia is trying to build also like a big processing industry using its chemical expertise and its oil refinery expertise.
And it's patient capital, which, in the oil sector you're more used to, and we don't have anymore, right? For us, our investors need quick returns. It's changed after the global financial crisis. It is the way it is. There's not much to say about that. One last thing I would say on this is going to sound almost cheesy in today's context, but is a cooperation with International Energy Agency countries or the G20 or the OECD more broadly, specifically on processing. Right, there is no money in processing. At the Commodity Summit in Lausanne a month ago or something like this, the CEO of Trafigura basically said, they should nationalize part of our smelting capacity because the margins are not there. There's only money to be lost in the face of basically just a level of systematization in China, scale that we have never seen before, right? And quantity is a quality in and of itself, and China has that quality more than anybody has ever had it in this particular part of your minerals midstream. You're not going to incentivize some private capital to go into processing, and that's going to happen. You might work on R&D and different processing methods, right? I'm not saying that. There's always technological gains to be made, but the big chunk of sort of hydro and pyromet, sort of the processing methods, there's no money to be made in there, which means government needs to cough up money. And the US can't do that alone. You can diversify that with other countries, especially if you want to have processing capacity for a whole set of minerals. And then we're talking. But right now, we're not really seeing this as the key direction of the Trump administration, even though they are willing to pursue an energy security program at the IEA. And I think that's a very good first step to get towards more engagement on critical minerals with the IEA countries.
Tom, now I want to move on to a next topic which you have been working on a lot is de-risking. And I mean, in the critical mineral space, that's I think potentially one of the biggest challenges and the biggest trends right now is how to de-risk and to unlock much more private capital and to attract much more private capital, investments more in general, to critical mineral projects, mining and processing. I mean, over the past months and the year, we've seen a lot of mechanisms being floated. One of these is so-called price support mechanisms, where the government would come in through a price floor or price ceiling, pay the difference compared to the market price. And ideally, I think will also be seen based on that is to link this to offtakes, to give that demand certainty and to de-risk in the end these projects. But what are your views on this? What are the challenges and what are potential solutions to help to solve this in the end?
So I think with de-risking, you first need to ask the question, what are you de-risking for, right? Are you working on a project in North America where the problem is you can't compete, you have a lot of higher capex and opex requirements compared to Chinese competitors, basically? You know, are you de-risking for that? Or are you de-risking in a country with a lot of security and conflict and political risk? And do you need to work on that because cost of capital is too high, the risk of operating is much too high as well? So first, I think important thing is to discuss what is it that we're solving for, and then you can start looking at the instruments. I think the instruments fall within, for me, sort of three big buckets, which is finance, trade, and, as you say, offtakes, right? Needs a combination of positive and negative elements. Now we're often talking about sort of positive elements. How can we get, for example, more government money into the sector to help de-risk that? That can go through concessional loans, it can go through grants, it can go through some type of equity mechanisms, like, again, invest in a fund and then that fund invests in a series of projects. I think these are good conversations that are going on. As you say, the price floor is part of that.
Yeah.
I think the price floor it might be very important, but it's very difficult to set up, right? And it will need to be set up with a realization that government might lose money.
There's also risk involved. I think that's an overlooked issue. I mean, we as a company, we have conveyed that message a couple of times. If you want to design this, it needs to be temporary. So looking at potential supply deficit forecasts, because in the end, a government would be exposed to liabilities in terms of budget. So I think there are risks because it's also in the end an intervention in the market. So
and these are risks that government generally don't like to take. And I think that sometimes what we're seeing with the price floors, there's ideas out there to have a price floor in the case of predatory pricing practices. That might not be a bad idea, right? But sort of that difference between what is predatory pricing and what is just boom and bust cycles with a very strong competitor it's a bit murky. It's not very clear. Then you need to watch out that you don't think, I'll buy low, sell high, and then well, it turns out that actually the market has changed and that you're,
setting the right
lower
price
point
is very difficult, I think.
So I think that's a complicated one. I think trade instruments are important for that. There, I would also say penalizing some of the worst offenders, ESG offenders. I think that is a good strategy to go for. And then, as you say, offtake. And offtake, I think, is everything. Offtake and financing, if you wish, are chicken and the egg, right? You don't get offtake without financing. You don't get financing if you don't prove the offtake. And governments have tried to sort of be a matchmaker there. It's not an easy thing to do. So you will need to add some form of market making aspect to that.
But that's what the US is looking, because coming back to the US, because this question was, I think the focus was more broadly, because different actors in the world are thinking about this. But looking at the US, because first I want to step back, looking at the EU, what they've done in the Critical Raw Materials Act is basically what the aim is a matchmaking process. The US wants to go further, right? Based on the executive order. They want to incentivize a bidding process, if I'm not mistaken, and then in the end to bring the raw material feedstock through that off-take bidding process and link it and support this link it to support the domestic processing projects.
So that's the theory. I think it will be very difficult in practice. Now, the Biden guys had already tried to do quite a bit of that matchmaking, and I think the Europeans are going to find out it's a lot more complicated than what they had imagined. Like CRMA does very well with the strategic projects. Now the idea is, the European Commission and will be involved in matchmaking is going to be a lot more complicated. Downstream players are not really willing to pay a very high premium just yet. More for security of supply, right? Today.
But even that, I think.
But even that, right now, their margins are compressed. Let's take an EV company or a battery company. Margins are compressed. You cannot start, paying more for the same type of material.
Tariffs as well now come on top of this.
Spot on. So it's a very difficult reality for them. And the idea that we say, the Volkswagen and Tesla should pay more for it, I'm not sure that is sort of the reality behind this, right?
Yeah, that's I think our take as well. I mean, having spoken to a lot of OEMs or downstream players, there seems no big appetite to pay a premium. And I think in the end, it's also due to, to set this up, it's quite challenging because these markets are opaque. They're not transparent, especially with the little minerals and metals. I think that's a big challenge.
Yeah. And one last thing on the de-risking, I think, is we also really need to start diversifying by critical minerals. All right, there are small markets where you can have a big dent. Germanium is a good one, where you have producers that can basically have a byline of germanium. They're not doing that today because the incentive isn't there. Facilitate, if you wish, their decision-making by offering whatever it is, fiscal incentives to do that byline. And you will actually start reducing Chinese dominance a little bit. If you talk about copper, we're talking about a completely different market.
That's
a major market. But you have smaller niche minerals where, quite frankly, at one point, you're just going to have to cough up the money to de-risk that. And I do think it is something that the government can really, really help with, because we're not talking here about dozens of billions of dollars, right?
Looking at the risk, for a market like copper, there would be huge risk, I think, in terms of market intervention. And then perhaps the last issue that I want to cover, again, it's more broadly, it's definitely not, I think, on the cards right now or on the table in the US, but I think the big elephant in the room is China in all of the discussions. One of the biggest political or geopolitical drivers of the industries we cover is ex-China supply diversification, given China's dominance across clean energy supply chains, especially at the midstream and the downstream parts of the supply chain. Some policymakers, especially in Europe, start to realize that perhaps involvement with Chinese companies is needed. We've seen Chinese investments coming in Europe anyway. Europe or the EU in general has a different view to compare the EU and the US on China or Chinese involvement. Although now they start to realize, investments are coming in. Chinese companies, especially on the downstream part of the supply chain, have the technological expertise, are making huge technological advancements also in the next gen battery technologies. Why not cooperating with them, but on the different conditions? Basically, under the China battery and EV playbook that China used for decades and applied to Western companies in China, working with policy measures like local content requirements, GV requirements, with tech and IP transfers, and making that conditional to funding. But what's your view on this? Because in Europe, where I'm based, that's big political discussion right now. How are you seeing this based in the US, but what are your views on this, how to move forward? Because in the end, it's about decarbonisation as well, right?
Yeah, 100%. So, and you still need to ideally be bullish on deployment of EVs, of batteries, and other clean energy technologies. I think for Europe specifically, there are several projects that try to do it fully on their own, and they went into a wall for different reasons. Northvolt probably being the best example here. I think cooperation with China can absolutely be part of your solution here, right? What is it that Europe is trying to solve for? You know, the good thing about China is they always had a very clear statement of purpose.
Yeah.
We are vertically integrating, we are narrowing margins at every single stage because we want to be competitive at the battery and EV level. Europe needs to make a decision. What is it that we are solving for, right? I think a big part of it, of what is driving Europe, of course, is competitiveness and jobs, right? Now, who has the technology? China. Can you do R&D for next gen? Of course, do that. Focus on it. Try to support those technologies into
that's been happening right now
into higher technology readiness levels and so forth. But when you talk, for example, you know, let's bring up LFP. What are you going to do? Are you really going to try to play catch up with China, who are producing now at what, $50 per kilowatt hour? You won't get to that level in 20 years. So the JV idea, I think, for me, is a big one. And in the US, this, you know, with the Ford CATL deal, this ran into a political wall. But in and of itself, the idea of getting into joint ventures with Chinese technology incumbents.
But that deal in the US is now in jeopardy, I think, to some extent, given the developments in Congress and...
and to that, I would say, I think Europe should tread much more carefully. And it's possible, right? What does Europe have that right now nobody else in the world has? A major market of consumers. You know, the US market is currently pretty closed off for Chinese investments in electric vehicles, batteries, and so forth.
Tariffs.
Europe has that market and China wants it. China needs it. That means that Europe, if they group together a little bit better, can, as you suggest, put stronger requirements, right? Now, I'm not saying that China's joint venture model of 50% plus one, and we learn by interacting, and you know, your companies come in and
taking some bits from that.
Absolutely, skilling, employment, the location of certain
building ecosystems, regional ecosystems.
Exactly, and making sure that might be linked to where you will have job losses, because in the the ICE to EV transition, you're going to have job losses, even if you do all the manufacturing domestically. So exactly, talking with China about those things. And China is willing to cut deals. We have seen that with the EV tariff situation in Europe, where at one point they were very happy to negotiate, we'll bring up the prices of our EVs, right? So they are willing to negotiate. And Europe, on normally the market access trade side of the equation, can be a very good negotiator. So I think that is your solution. And then you will have the cells and even cathode and anode manufacturing onshoring with Chinese help. Yeah.
Okay. Thanks, Tom. I'm afraid that we need to finish our very interesting discussion. I guess next time we'll need to, I'm more than happy to continue our discussion perhaps in New York, because, I mean, given the rapidly changing industries we cover, but also the geopolitics, I think in a couple of months we'll have, again, a lot to discuss.
No doubt. Yeah. Thank you for having me.
Thank you so much.
Bryan.